um, we're waiting just a couple minutes. We have just quite a few people. Just want to give them some extra time. I'm gonna, so in the chat bar, if you guys have any questions or anything like that. Hello, guys. Thanks for coming. If you guys have any questions, please feel free to put them into the chat room. We are going to have, I'm going to just kind of go through the presentation with you guys first, but hopefully there will be some questions for you or that you have, and I'm happy to answer any of those, but we're going to kind of wait till the end. So one, we can be respectful of everyone's time, and two, so that we kind of don't get off track with the time that we have in our webinar. And I hopefully that good morning, Steve. Hopefully the presentation will answer a lot of your questions for you. I do want to point out the disclaimer at the bottom. This is information that is sourced on every slide. However, I just want to know that it's provided just in good faith. However, I am not an accountant. I am not an attorney. I play one in real life. No, I'm kidding. But I just wanted you to know that it's just opinions and some factual information so that we can hopefully figure out what's going on with the Dayton area market regarding real estate. So since we are solidly into our presentation, let's go ahead and start. So how is the coronavirus affecting the Dayton housing market? Here's our agenda today. Obviously, some people know me on the presentation, some people don't. So who am I and how am I qualified to talk about this stuff, right? Well, I am a real estate broker here in the Dayton area. I've been successfully selling real estate for 3+ decades, so time alone gives me some experience. However, I have been through all different kinds of markets. When I first started, we were at double-digit interest rates. We went through we were doing land contracts and lease purchases and assumable loans and all that kind of stuff, which a lot of people probably on this call don't even know what those are. And then we had the terrorist attacks in 9/11 and some changes from that. Then straight into the collapse of the Dayton economy caused by or brought on by Delphi, GM, NCR, and Mead leaving our fantastic community, straight into the Great Recession of 2008, where pretty much the country collapsed, and all that happened there with, crazy amounts of foreclosures and what have you. Then through the last, pretty much 4 years, we've had, in my 30 years, quite frankly, probably the best seller real estate market in the history or my history of selling real estate for 30 years. So straight smack dab into like what felt like a stop, you know what I mean? Are we on live now? That's the fun thing about live video. Can you guys send me a message? Let me know if you can hear me. Okay, perfect. Sorry about that. That's the awesome thing about live, right? So let me go back to, let's see where we were. You know about me. Okay, let's move on. So this we'll start back over. So this is the showing time service, which logs all the showings across the country for the top companies, and hence we have to have buyers to go through properties to create contracts and create closings. So this is a graph from showing time that the first week of March was solidly 40% above last year at the same time, 2019. And then the March 16th even, we were up 30% over 2019, the year just before. So March 17th is really when kind of this whole shelter in place started, and the uncertainty of our market kind of was freaking some people out, right? So as of March 12th, 2020, we were about 40% above. March 16th, we were 30% above. And then on March 17th, you can see how it dramatically changed. So through that next week, people were wondering what was going on. How is this going to affect us? Is it going to be 2 weeks? Is it going to be 2 months? Is it going to be 2 years? We really didn't know. So on March 17th alone, showings dropped 11%, right? And from like I said, week 316 to 322 was the first real week of uncertainty. By 322, just a week later, showings had dropped literally 36 to 38% just in that 2-week period cumulatively. Prices from 300,000 to 500,000 declined around 35%, so it was even larger. And over 500,000, the property showings dropped between 50 and 60%. So under 300,000 really had not declined a whole lot at that time, but the cumulative effect was, like I said, roughly around 36 to 38%, which kind of freaked everybody out. So what happened over the last month in showings and properties just here in the local market? So obviously you see in March, early April, it was severely declining. Things were going down at a rapid rate. And then when it came to probably around April 12th, 13th, something like that, we went into like a stabilization period. And then ever since then, we have been increasing to a new norm, which is still off from last year, but it is still a new norm of around a 40% increase again over where we were. So it's been strong personally. Like some people have chosen to shelter in place and to pause, which we totally respect and understand. Yet others have continued to buy homes during this time frame. Personally, the properties that we put on the market, and I think we've sold 15, they've all sold again within 4 to 5 days. So there's many factors affecting the real estate market, and the employment market is the next sector of what's happening regarding the real estate market that I want to discuss with you. So again, as of the end of last year, 2019, you can see on the slide, our jobless rate was at a near 50-year low. So since I was born in 1969, that's when it rivaled what we had last year, where unemployment rate was literally somewhere around 3.5% of the overall market. So the coronavirus, you guys can still hear me, right? Tell me if you can't. I just want to keep going. So the employment market is right now, you guys, it has soared past cumulatively over 20% of our population in the United States is unemployed right now. You can see this graph, and obviously the source is Department of Labor. Since this time frame, we have lost 26.5 million jobs, and these numbers are as of the April 23rd, 24th, end of last week, when we had to source everything for you. So let's just kind of recap. On March 13th, there were 7.1 million Americans out of work. 7.1 million Americans out of work on March 13th. During the next 5 weeks, that soared, or there was another 26.5 million jobs that were furloughed or lost, basically. The highest level of unemployment since the financial collapse of 2008, which during the 2008 economic collapse, there were about 15.3 million people out of work. And if any of you lived through that, you know that was kind of a crazy time period too. Yet right now, we are currently at 33 million people in our country out of work when you take the 26.5 million that have gone out of work in the last 5 weeks and add it to the 7.1 million. So the effective rate of unemployment right now is at a little over 20%, which is as high, if not higher, than where we were percentage-wise in the Great Depression back in 1934. So that just kind of really, hopefully, hits home the graveness of the economic situation that we're currently in with regard to job loss. So if you have a job right now, just count your lucky stars. So I know people have said to me, though, that, well, there were a lot less people in the United States back in, the Great Depression. So I understand that. However, it's the percentage-wise. So we have a little over 20% of unemployment, which is what they had back in the Great Depression as well. Okay, hopefully that's clear. You can see here that this is the numbers, the 20% population. So what industries have been most affected? Obviously, you hear it on the news every day if you're one of those that are watching the news every day. The leisure and hospitality industry, which is the shelter in place. Like, we're not allowed to go out and eat. We're not allowed to visit restaurants. We're not allowed to visit bars. Hotels, Airbnbs have been dramatically affected. Next is healthcare and social services. And this one actually kind of surprised me because, and it has surprised me over the last month because, with the coronavirus, you just automatically think health, but there's so many different sectors to healthcare. I have friends who own dental offices that are shut down, which I didn't even think about that, which makes total sense. I have friends who are in the surgical industry and cosmetic surgery and, just any other surgery that doesn't have to do, with the coronavirus, and all of the elective surgeries or non-life-threatening have been put off. So there are surgical nurses, all these people that are out of work. Physicians' offices have had to shut their doors and do by, appointment only and so forth. And then obviously daycares, that just made sense. So professional businesses, temporary help services, travel services, all of those small businesses that just, they're not allowed to have people come through their doors. Imagine that. Retail trade. It doesn't seem like it sometimes when you go into like Walmart or Target, but truly those are essential because they sell food. But if they just sold clothing and accessories, they'd be closed too, right? Sporting goods stores, bookstores, all that kind of stuff. My team and I did a dream board session on Saturday, and we needed all these magazines to, cut out our dreams and make our boards. And we were like, oh, holy cow, how are we going to get that? So we improvised and got some things off the internet and printed them from there. But I didn't even think about, Barnes & Noble being closed. So then what happens? The government stimulus comes along. The CARE Act of this situation provided $2.2 trillion in stimulus in a package to help the American population. The PPP was the payroll protection program, and it was forgivable loans designed for small businesses, right? Designed for small businesses like ours and many others with less than 100 employees. And those funds ran out in a nanosecond. They were, in my opinion, not handled quite properly. And there were some large companies, as you guys have probably heard the news, that actually took some of the money, right? So fortunately, a lot of those, I think all of them pretty much have given back the money that they took. I mean, I'm not judging, I'm just making comments. But this all happened so fast. Everyone's doing the best that they can in the time that they can, and I'd like to believe that. However, there's not a lot of policing. There's not a lot of, they come up with regulations and stuff in the government, but who's going to monitor it? Like, who's going to make sure that it's only small businesses to get the money, and who's going to make sure that it's all done correctly? So fortunately, there was another $320 billion that was allotted for small businesses, and fortunately, most of those large companies, to my knowledge, if not all of them, did give their money back because I think they were shamed into it or something like that. So that was for small businesses. So what's next? How did the government help the individual population? Well, individuals were able to get $1,200 per person, and there's also some criteria around that, which is if you made, as an individual, $75,000 or less, you were able to get $1,200 from the government, and some people have received it, some people haven't. Or if you were filing jointly on your taxes, it was $150,000, and then you would receive $500 per child up to 16 years old, which I also found that kind of interesting because I thought you were a child until you were 18, and some people were children until they're 55, so it doesn't matter. But anyway, legally, it was $500 per child from the age of 16 and down. And so unemployment is starting to roll out. I've heard horror stories about that. I know people that got it right off the bat. I know people that still haven't received their unemployment check. Yet unemployment will be calculated based upon, the income that you're receiving, plus an additional $600 per week. So when that starts for some, I have no idea yet. I'm told by some powers that be that if you don't receive it now, like whatever day that you were relieved of your position, either by furlough or laid off or fired or whatever, you should receive all that back payment from unemployment as well. So if you can't get through on the phones, keep trying. That's just my advice to you. So the mortgage market. So how is this all affecting the mortgage market, right? Well, a lot of people that had their homes, under contract and they'd gotten pre-qualified or pre-approved, well, some of them stuck together, some didn't, right? So what I'm hearing all the time, and this is a big thing I want people to listen to, is there's forbearance and deferment when it comes to mortgages, right? It's two tactics that people are paying attention to, and honestly, that we learned from 2008 crash what to do, because the banks just they didn't play nice back in that time, and you guys saw what happened. Like, it was devastating financially for a lot. So both of them are basically allow mortgage payments to be skipped for a set period of time. Like, this isn't like a new way of being. It's like you're not going to be able to push off your mortgage payment to like infinity, right? Depending upon the lender, there can be some subtle differences. And again, this is just research that I've done and what I know, but every bank is going to be different. But the biggest difference from what I understand is that the end of the loan is how it's paid back. So a forbearance, a lot of times, is a lump sum payment of the amounts missed due in full at the end of the period. So say, for example, your payment is $1,000 a month, including taxes and insurance, and you were able to push it off for 3 months. Well, at the end of those 3 months, you guys, they want that $3,000 back, right? So if you think about the illogical aspect of that, you get it deferred for 3 months, but you're not getting paid either. And when you do get paid, how are you're getting paid your regular pay or a reduced portion of your pay by unemployment, or, well, in some cases they're getting more, but anyway, that's irrelevant. But seriously, like, how are you going to come up with that $3,000 if you didn't have it already? So that's kind of a weird thing. Deferment, on the other hand, is you can repay it over time, and it's added to the end of your loan. It's kind of like, I think you hear the car commercials out there talk about it all the time, like, no payments for 90 days. And they've been using this. They used this back in 2008 to 14 as well. No payments for 90 days. Well, just remember that old adage, you guys, nothing is for free, right? Nothing's for free. So you have to understand that if you miss that example, $3,000, the cool thing about the deferment is they may take that $3,000 and chunk it up over 6 months or 9 months or 3 months or whatever it is, so that you can add it to the end, or you can even add it to the end of your loan. Hopefully that makes sense. So these are some important notes to consider when if you're thinking about or you need deferment or a forbearance. Is it used to impact your credit, right? Because let's think about it. You signed a note that you're going to be paying your mortgage payment, and then you don't. So you can have credit issues on that. It's my understanding that during this time frame, there might be some hall passes. However, I would not take that for granted, right? It could involve totally rewriting a new loan. There were a lot of people before all this happened, including myself, that had started the refinance process because interest rates are, oh my goodness, like free, right? So it could involve just redoing the entire loan and taking that into consideration. It could be, rewriting a portion of it. So interest doesn't stop though. So even those months that your your forbearance or your deferment is, you're going to be paying additional interest on the interest that you already owed, right? So the interest accrual doesn't stop. It's temporary. It's just for a few months at most. Again, it's not a lifestyle. And don't just stop paying your mortgage. Like, you need to communicate with your bank. You need to document everything that you do. Like, seriously, you take control and make sure that every conversation, every documentation is in writing. And, big companies out there record calls, as long as in the state of Ohio, and again, I'm not giving legal advice, but as long as at least one party knows it's being recorded, it's my understanding that it's legitimate. But even if you call your bank and you tell the person on the other end, like they do, like, just for, training purposes or whatever purposes, this call is going to be recorded. That way you've documented that you've told Fifth Third Bank or whoever you're talking to on the other end that you are recording the conversation. So don't take every step possible to protect yourselves if you do have to go into one of those routes. And you still have to pay taxes and insurance for those months too. So they may say, yeah, we'll defer the mortgage payment, but you're still responsible for your $250 a month of property insurance and whatever taxes are. So if you escrow. So just kind of keep that in mind as well. How is this impacting the mortgage availability? This is a big one, okay? So, yeah, it's big. So although they're still giving loans, although mortgage rates are awesome, mid-April, the mortgage credit availability was at a 5-year low. So what does mortgage credit availability mean? It means, who are banks and mortgage companies willing to lend money to, right? The conventional index dropped 24.2%, which is big. So 24% less people were able to even qualify for a mortgage. Fannie Mae and Freddie Mac are the government loans. That was the least significantly dropped, but you'll see in a second it's going to be one of the most impacted long term because of what is in the bottom. And then jumbo loans, you can see that dramatically dropped by almost 37%. So jumbo loans, and I'll go into a little more detail later, is they're sold on the secondary market. And anybody that knows anything about this understands that the secondary market is wildly volatile right now. So FHA credit score is at a 580, okay? So if you are pretty much breathing and you can have a 580 credit score and a minimum 3.5% down payment, FHA will insure your loan, right? However, that doesn't mean a mortgage company is going to give you a loan, right? For that, because they can set their own parameters, and I'll tell you why in a second. But most lenders have increased their minimum score to 660, and Chase Bank has raised their minimum score across all financing, whether it's conventional or government, to 700, right? If you guys go on, everything I tell you, you can Google. So I call it Googleable. It's a new word I made up, but it's actually on Wikipedia. But anyway, you can go on and see that the amount of Americans with a 700 credit score or above is significantly low. It's really low. So what happens, I'll address this now before I go on. What happens is a bank, FHA may say, we'll give you the loan and we'll insure your loan, because the buyers put very little money down. So the banks are insured up to 20%, right? However, if a bank goes in, if a mortgage loan, goes into forbearance or foreclosure or anything within the first, I believe, 12 months from the time that the loan is written, that mortgage institution has to pay that money back, right? So if you read in the news right now, they're talking about that secondary market, and they're talking about the servicers out there. So like Mr. Cooper and Bank of America and all these people that service other loans, they're the ones, they buy the loans and then they take on the servicing of it, and they have to pay that money back, you guys. So it's significant. So what they're doing, the banks, by increasing their credit score limits higher than even what the FHA and VA are doing, is they're trying to protect themselves from the risk of these loans going into foreclosure. That's why they were done that. So the cool news about the jumbo loans is across the United States at the end of 2019, and I believe it's because property values are going up so much, they increased the conforming guidelines on normal conventional loans up to $510,400 for most of the United States, right? Meaning that a conforming loan without putting additional, funds into it and higher interest rates, a bank will loan you up to $510,400. Being that the second market is unstable, it's put more restraints on the mortgages backed by the securities for the secondary market. The minimum credit score is 700 for jumbo loans, and the minimum down payment is 20%, right? So if you're buying an $800,000 house and you have $100,000 to put down, and they'll loan you 510, there's about a $190,000 gap, and that's what causes the jumbo loan, right? So if you have $290,000 to put down on an $800,000 house, then you could go conforming. But if not, that puts you into the jumbo loan, where the interest rate's going to be closer to 5.5%, where rates are about 3.5% right now, and that kind of thing, because they are more unstable. Conventional minimum credit scores are still 620. Some lenders have increased those also. If you have a 740 credit score, this is just kind of a side note, but it's still true today. If you have a 740 credit score, that's where you start to get the best interest rates. If you're at, Fifth Third Bank or, blah, blah bank, whatever it is, if you have a 650 or 660 credit score, which goes conventional, your interest rate's going to be higher than somebody that has a 740 or above. Like, the better your credit, the better your interest rate is with these banks. So pays to, pay your bills. So minimum down payment is still 3% with good credit rating, which is actually less than FHA's minimum down payment. A lot of people don't know that. But again, you've got to have a high credit score in order to get only that 3% down rate. And there are always, in every situation, there's going to be some zero down payment loans and so forth, some, low income loans, but we're not, for purposes of this conversation, we're not going to address that. And then the rates are 15, 20, and 30 years. And on conventional loans, you can buy a primary home, which is obviously where you live, or a secondary home, which is a vacation house or a lake condo or something like that. So who's buying homes right now, right? That's what everybody's saying is, what's happening, Denise? Like, who are buying homes? Who's crazy enough to be out there without masks, right? Well, we've taken all the safety precautions. We've got all that stuff. But what's happening right now, you guys, is what I call experiential movers or experiential life events. So in every market that I've been in, again, I'm a fossil, there have been buyers buying and sellers selling, So who's doing it? People need to downsize. Like, when you get to a certain position, whether it's through health or age or just choice, and you decide, like, this McMansion that was a great idea 10 years ago is not such a great idea now, or these stairs were a great idea, they're not such a great idea now. It doesn't matter whether you're in a country crisis situation, you're in a life event situation. It's for whatever reason. There's always seniors moving into assisted living or independent living situations, so they just can't take care of themselves anymore. People are always upsizing at the same time. You just had that fourth child, and all of a sudden that 3-bedroom, 1,100 square foot house just became too tight with all the Pampers. So you got it. Everyone's thinking about things differently. Combining of families. There's people always getting married. And then you move 2 domiciles together, and then you're outgrown. And unfortunately, people are always getting divorced too. And job transfers. There's still companies moving people around. You know, we're seeing a lot of that right now. I have friends all over the country that sell real estate, and I'm seeing my friends in California are getting a lot of job transfers from the East Coast, like DC area. So it's kind of interesting. And the military are always moving their families around and, you know, different things. I will tell you right now, we just had a military transaction, and it's one of the ones that I thought may not go through yet, because he is in Philadelphia area and they are on complete lockdown. So the military has locked down, no moves, no anything for anyone, because they want to keep their people safe and in place. But he went ahead and closed his house. His wife closed it, and you know, we handled all that. And then unfortunately, you guys, we know regardless of coronavirus or not, people are always dying, right? It's just something that happens. So what are the benefits, right? Depending on all these other factors, right? The economy, jobs, the mortgage availability, the number of sellers in the market, the number of buyers in the market, that's what determines a seller's market or a buyer's market, right? It's just a simple math of supply and demand. If there's more houses on the market than buyers are buying, it's going to be a buyer's market because they have a lot to choose from. If it reverses and there's more, you know, buyers buying than there are sellers out there, which is what we're experiencing exactly right now, then it's a seller's market. So people are asking me, have prices been impacted? And I'm like, not to my knowledge so far in the Dayton market, right? We're still seeing houses selling in on average 3 to 7 days if they're priced right to begin with. We're seeing houses sell for at or above the asking price still. There's less market competition right now for sellers. These are some of the pros, meaning that there's less homes on the market. Again, we're solidly into a spring market. There's a lot going on, but there's a lot less going on than is typical. Your ability to negotiate as a seller, because you've got a little bit more control right now. There's not as much for buyers out there to buy. They're more motivated and serious buyers, you guys. Think about it. Last spring, well, even all year since this market's been crazy, we're seeing properties go under contract in multiple offer situations, and, you know, 5 days, 7 days, 10 days later, they fall out and come back on the market because the buyers get cold feet, they back out for inspections. Right now, the buyers that are out there, think about it, they're really, really motivated, and they're really, really serious, or they wouldn't be out, you know, fighting this whole shelter in place thing. There's far less showings for you as a seller to have to deal with. On average, our listings are selling between 2 and 6 showings right now. So instead of, we've had properties literally even at Christmas time, on Christmas Day, we had showings on some properties, and we had one property that we took we took on the market December 24th, and by the end of the weekend, it had 17 showings on it. That's a lot in 2 days, right? You might as well get a hotel and just go hang out. And then this is something that's interesting happening right now, is there are potentially no appraisals. So we'll talk about that a little bit later, but because of the shelter in place and people not going into houses and the safety of the appraisers and all that kind of stuff, I'm currently refinancing, and my bank didn't do appraisals even on my own properties. They're doing drive-bys, or they're doing what's called desk-type underwriting, where they just go and they look at the house and they look at some other houses around it and they just do it that way. The cons are, you know, having to sanitize your house because you are having, you know, strangers in there. You don't know who, you know, where they are, what they have, right? And extended time frames and sometimes inspections to close the deal. So it can take a little bit longer right now than it was before to actually get the property, you know, sold and closed. Buyers, what are the pros on buyers right now? Some of the same for sellers, you know. There's less competition for houses. So you're only competing with, you know, 2 to 6 other buyers as opposed to 16 other buyers. Do you see what I mean? So you may be able to negotiate some better terms and better prices as well, because you have a lot less competition that you're fighting against. Wildly low interest rates, you guys. Like I mentioned in the very beginning of the slide, when I started selling real estate, interest rates were double digit. I bought my first house in '92 at 11.5%. I know, crazy, right? But I thought it was great when I refinanced at 8.5%. I thought money was free then, and wow, now I'm refinancing at 2.75. So that's even better. However, they may even go lower. You know, they say right now that the typical conventional mortgage is right around 3 to 3.5%. They're anticipating it may go down to 2.5 to 2.75% on the standard 30-year. So discounted typical moving services. So again, that whole supply and demand. There is activity in the market. It's not as rampant as it normally is at this time of year. So you may get some better deals on a moving company or you know, a contractor or anything like that, because you know, people still need to do work and they may discount their prices. No guarantees. I'm just giving you a possible pro. Some cons: reduced buying power if a buyer is laid off. You know, so if both of you are going into the transaction and you have to move, and one of the buyers is laid off, that dramatically could potentially throw you out of qualifying for that house that you were wanting. Potentially less efficient process. Again, it's taking longer to get things done, and again, some extended time frames to close and or inspect the property and get some things done. So how has the real estate industry pivoted? Like what's happened? Like how are we still selling houses? What's going on? What's coming up? What's next? What's new? And this stuff is really exciting. You know, people that know me have heard me say for a long time that, you know, Mark Twain said that when the world comes to an end, he wants to be in Cincinnati, I say, i.e. Dayton, because, you know, it's 20 years behind the times. Well, again, it's true. You know, everything happens on the East and West Coast and, you know, Florida and the busier places, and then it all trickles down into our area. Well, 3D tours is what's new right now, you know, and they're not new. They've been around a long time. The faster that a real estate company, a real estate agent adapts to the things that we are showing you on the screen is going to be whether they survive or thrive to be able to help the new seller and the new buyer in this market. You know, meaning that a seller may not want all these people coming through their home, or how are you going to show their house if they don't want foot traffic, right? So if you adapt to the things that we're sharing with you and what we've already adapted to and had a lot of it in place is 3D tours. Like, let me show you an example of a 3D tour. This one. So here's an example of how we can walk a buyer through a home by following the little paths of taking them around up and down. Pretty cool, huh? Good picture quality. You can go up, you can go down, you can look in, you can look out. Opens the door for you. That's pretty clever. But it's not some of the old type things that virtual reality, honestly, personally makes me nauseous. But this isn't quite the same. Like, you can go at your own pace. It's really kind of cool. So you can see how buyers can look at homes, and you can show a seller's home to a buyer without ever having, you know, someone step in the door. So sorry, I'm trying to get this stopped. So that's an example of how we can show a house to a buyer, you know, without even taking the buyer through the home, right? We also can show you how we do listing presentations now. So for years, I've been able to sell properties that I've never even been in, and I work with a lot of what's called expired listings, meaning sometimes they're not even in the area. They've had their house on the market with somebody else, and they can't sell. So sometimes they're in Florida or Arizona, or, you know, across the country or across the pond even. So we have in the past done a lot of videos. Oops, sorry. Told you I'm doing this.
So here's an example of once we did all the pre-qualification and so forth, when we talked to our clients on the phone, this is how we can actually present online. So you can see over here, you've got me and the potential client, that's Sarah. Hi, Sarah. Hi. But the cool thing about it is you can see body language, you can ask questions, all that kind of stuff. And when we go to the market evaluation, it's very simple. And actually, when we present in person, it's kind of cool. Here's one I did today. It's kind of cool, but I present using my iPad. And honestly, being on your computer, you can see the active, pending, and sold listings. You can see the pictures even more clear. Sarah, how does that look to you?
Wow. Super clear and crisp. Yeah.
And as you go through the relevant properties.
So you guys can see how we can present to clients like that aren't sitting in front of us, or we're not sitting in the house. And what's really cool too, I just found out on Zoom meetings, is we can actually put them into the like a backdrop. I can put a backdrop behind me that may be their living room or maybe their kitchen or something like that if they've been online before. So through Zoom presentations, through Workplace by Facebook, through live stream open houses, where we actually just walk through a property, we can do it through some software that we have, or heck, you can just do it through FaceTime, right? You can go on and do a Facebook Live to do an open house. So nobody ever has to come into the property. And again, if they're interested, then they will raise their hand and say, hey, we want an actual physical tour of the property. And then we can take them through, you know, also. One of the other coolest things that I believe this industry is causing is because people really have only wanted qualified buyers and sellers in their home. But right now, the real estate industry never really followed that. But right now, sellers are asking for pre-qualifications, proof of funds, pre-approval letters before anybody even comes into their house, which they probably should have been doing for a long time now. But I love that trend, and I love the fact that that's one of the new cool things that's happening because of this pandemic. We can do digital signatures, we can do digital closings, and we do video inspections. So is it every buyer that's going to want to buy a house sight unseen? No. Is it every buyer that through the crisp video that we have and the tours that we do and the opportunity, if they really want to move, can actually at least start the showings there, right? So the time is very efficient. These are some of the innovative tools that we have and things that we're using. And there's a lot of other things coming online that are just going to be for the next generation of buyers and sellers. So as of 2001, hand me that book. As of 2001, we were still using these old-fashioned books. These are called MLS books, right? We were selling properties on 2x2 pieces of paper. See that? So this was a big deal back in 2001 where we switched over to the internet, right? Now the internet makes everything so efficient for buyers to get to properties first before they even hire a real estate agent like myself. And so I feel like this new way of being and showing properties and doing business is going to be kind of like from moving to the old-fashioned MLS book to the internet with our websites like DaytonRealEstateOnline.com and Zillow and all that kind of stuff. So there's a lot of uptick, there's a lot of positive. Again, there are some people that are choosing to shelter in place, which I totally understand. Yet if somebody is really wanting to buy or sell for a lot of reasons, there's a lot of good opportunity. I just want to be here for you if you have any questions. This is one of our clients, just to end on that. Colleen's story is she was taking care of her 90-year-old mother. And we had her house on the market a year ago, and she wasn't able to complete the sale due to some health issues with her mom. She was at an at-risk seller now. You know, she was had issues that she was really afraid. We talked about 2 months as to what was going to be the best thing to do, but she has a new home that's being constructed that is closing on March 14th, come heck or high water. You know, they didn't have pandemic clauses, which are going to be into new contracts. Trust me on that. They're going to have pandemic clauses into buy and sell agreements for all different kinds of things. But she had a house and she didn't want to lose a bunch of money by not closing on her house. We put a system in place, and we listed her home on March 13th. And, oh no, I'm sorry, March 27th. March 27th. I just told Sarah's here with me because she knows everything. So on March 27th, we listed her home, we sold it. And this is her comment to us. Even during this market and the uncertainty, it's always better for somebody else to tell you how they felt than how we tell you that we're going to do things. So I'm here for anybody, whether you want to buy or sell or just want to chat, whether it's tomorrow or 2 years from now. I don't care. I'll be here. But I just wanted to give you guys some factual information about what's happening in the Dayton area market and how we're going to be able to move forward positively and proactively, into the future. So if you guys have any questions, please feel free to put them in the chat. If you do want to schedule a call with me, all you have to do is connect here. Set a time to connect. I'm happy to talk with you. Like I said, whether it's about real estate or something else that I'm qualified to help with, I have a pretty good ear. So anyway, I appreciate everybody for joining. And if you do have any questions, let me know. If not, you can reach me directly at 937-619-7454. And thank you. That's all. There'll be replays also be sent to you, so you can share this with other people if you like. So again, thank you for joining. My time with you is complete if we don't have any questions. All right. Take care. You guys have an awesome day. Bye.